Well, here we are. It's the Holy Grail. Who's going to tip the best stock for 2021? Everyone wants to be standing on the podium and everyone wants to be a gold medal winner. You're going to hear it first here.
Here's your chance. Small caps have been the right place to be in Livewire's fundies tips for the past few years. What's your number one pick for 2021 and why do you like it?
Corporate travel management. It was our number one pick for the reopen trade when we were getting bullish again on equities. I think that the market's fears that maybe Zoom calls or phone calls being the way of the future and no one will travel anymore is overblown. I think that business travel in particular will probably be the first to rebound and is an essential part of the business. You need to go out, meet companies, kick the tires, press the flesh with people. And I think as soon as people feel safe enough to start flying again, that pent-up demand that they've had for the last year basically will come through in business travel.
Look, I'd like to put forward Prime West Group. It's a property funds management business. It's based out of Perth, a little bit off the radar, under-researched, undercovered, illiquid, 80% owned by its founders, very entrepreneurial guys, vast property experience. And what I really like about this story is it's built its funds under management. So this is a fund manager that invests across property and via syndicates and wholesale mandates. It's actually built its funds under management from 2 billion up to about 5 billion in the last couple of years. So very, very strong growth. And if you look at the peer set, you've got Charter Hall, which is in the ASX 100 at all-time highs today. You've got Centuria Capital, is sort of in our small mid-cap space, 1.5 billion market cap, about 10 billion in funds under management. This business is at 5 billion, so you've got a low base, I think aggressive growth in funds under management in time. It's got 50 million of net cash on the balance sheet, so very conservatively geared, and I see very little downside risk in the stock at this price, around the $1.15, $1.20 level. This stock was trading $1.40 pre the COVID-19 crisis, so we think this has a very long runway of growth and with very little downside risk, so we really like that and it is our largest position in our emerging companies fund.
I think a good stock for 21 is Sonic Healthcare. I think the market's underappreciating how long the COVID testing is going to go on for. It's already had a good boost. As we know, it's a global pathology company. It does a lot of standard testing, but it's had a big boost from COVID testing. And post the vaccine, COVID testing isn't going to go away. And we also don't know how long the vaccine actually lasts. So there's another leg of growth that's available to Sonic, which is antibody testing, which tests, are you immune to it? Are you still immune to it? Did the vaccine work for you for 3 months, 6 months? It's got global growth. It's got an excellent management team, good cash flow generation, and with all the COVID cash that it's generating, it should be able to buy some really accretive assets around the world to improve its footprint, increase its geographical footprint, and it pays a nice little dividend yield of 4%, and it should do you well in 21.
So ICE, Intercontinental Exchange, is my pitch for you this year. It is a remarkable business. It is a play on the digitisation of financial markets and incremental financial services industry digitisation as well, through mortgage origination, through bonds, and it was all, thanks to their visionary founder, Jeff Sprecher, who saw that opportunity to digitise previously analogue things that we take for granted today. He is bringing us into the 21st century in financial markets, and it's a really exciting growth opportunity in a robust economic moat business as well.
So our top picks are Galaxy Resources, and I'll even throw in one more, Pilbara Minerals. Yeah, so look, we've been doing quite a bit of work on electric vehicles and implications on battery materials. So at the moment, EVs are roughly 5% penetration. And with the raft of policy we've seen emerge through the pandemic, so if you look at 2015 to 17, EVs were driven by China. What we're seeing now is a whole bunch of policies such as subsidies and tax exemptions, which are coming out of US, Europe, and already Europe's producing more EVs than China. And General Motors come out with 30 models of EV alone by 2025. So that's going to underpin the demand for battery materials. At the same time, you haven't seen a lot of supply because of depressed lithium prices. So I think from here on, the commodity price has to increase to incentivise production.
What we're most excited about for next year, and for actually many years looking out from here, is the theme or the trend around large alternative asset managers. And the benefit of that is it gives you 3 stocks. So it gives you Blackstone, KKR, and Carlyle. And together, those three firms.
I'm going to squeeze you for one. Which one out of those 3?
Well, Blackstone's the best in class there, but Carlyle's got a lot of upside to its profits. So we're down to 2. But
let you get away.
We like all 3 of them, and together they hold over $1 trillion in client assets. They've been growing those assets under management and their earnings at double-digit rates over the last couple of years. Their clients need them. They need them because they're the only asset managers out there where sovereign wealth funds, and pension funds and insurance companies can go to allocate billions of dollars at a time. And they're also trusted advisors, and they have all the systems in place to make it easy for the CIOs at these big funds to sleep at night. Even better than that going into next year is that all of their advantages, all of their growth is going to be accelerated by the low interest rate environment.
One of the great themes I'm really interested in is protein engineering. And there's a lot of companies, but there's a couple of companies, particularly one called Cytomics, which essentially trades almost at an EV of 0.
Where's that listed?
In the US, listed in the US. It's very exciting. It had a lot of news coming up. It makes so-called antibodies that have a chemical or warhead attached to it, and that basically guide it to where it should be exploding. And it's very exciting. They have new technology the way they do it, and over the next 12 months, they will have quite a lot of interesting data coming out, hopefully.
Protein's exploding. Nothing better than that.
That's right.
Okay, our favourite pick at the moment is Mortgage Choice. And I'll preface it by saying we are the largest shareholder in Mortgage Choice, but we actually think the outlook for the next 5, perhaps 10 years is fantastic for the mortgage broking industry. They've been through hell and back lately with the Royal Commission. It looked like at one point mortgage broking was going to get shut down, but we think it's actually going to proliferate now. And what you've seen in overseas markets is broker share has gone up considerably in the last 10, 15, 20 years. The banks just can't sell a mortgage overseas. They can't sell one here. Mortgage Choice as a broker, we think will be a beneficiary for an expanding market share in that broker market.
It's Tyro Payments for me. This is a business I think has got a really good long-term structural growth story, but I think 2021, as we see the economy reopen, relaxation start to come back in, because of the number of hospitality merchants that it services, we should see some pretty strong growth. So, there's 4 catalysts I like about this business next year. Firstly, the volumes of transactions through the network are going to really start to accelerate. Between December 1 and December 11, they did 29% volume growth versus the PCP. So it's already starting to come through. Secondly, I think you're going to see further market share gains and potentially the entry into some new verticals. Third, there's going to be the launch of Tyro Connect, which is this integration hub they build around point of sale, which I think is going to create more customer loyalty and uptake. And I think the lending part of the business, which was frozen during COVID for good reasons, will start to go again. It's quite a profitable part of the business for them. So hopefully Tyro does it for me this year.
So last year was Bid Energy, and I think Bid's got a good future this year, but we always want a bit of variety. And I'm going to go with the turtle, not the hare this time, something a bit slower. And it's domestically based, and it's Downer, which is in the middle of restructuring its business. It's selling assets, sold something this week, a mining business. It's selling its lumpy, heavy, capital-intensive components, going into a much more capital-light, service-based business with a lot of government long-term contracts. And it's really unloved by the market, and it's trying to fix itself up. It's fixed its balance sheet, it's fixing its business mix up. And I think it sits alone as a service-based business for that mid to large cap market. And as they see it unwind some of these businesses and focus in on the better returning businesses, it gets a re-rate. So today, $5.30. I think it can trade on a slightly higher multiple, so you're going to get multiple expansion. The earnings will go up. And I think over the course of the next 8 months, you're probably going to get $7 out of it, as long as the story unfolds the way I think it will.
So a bit of infrastructure in your portfolio should be an upper, not a
downer.